All right, Sonal, thanks very much for that. That's on Phoenix Mills. Stock is up around 2%. Specialty restaurants is the other one which is buzzing in trade. This is after the company said that they will be meeting later on this week to consider fundraising. Tell us more, Mangalam.
Well, it's interesting that the company is raising funds because, up until now, it has been a largely debt-free company, and the expansions have all been through internal accruals or the early investors that came in the company. Now, if they're raising funds, the question is, what they're raising it for. Is it a strategic partnership that they're looking at? Is it a financial partnership? And what those funds would be deployed into. The board will meet on December 21st. So, we will know the answer to that very shortly. The fundraise is via issue of equity shares or any other eligible convertible securities. The stock has been a star of this year, no doubts about that. 157%, closer to its record high. In fact, it has been wobbly over the last many years, but now it seems to have seen a bit of a structural up move itself. And that's backed by improvement in their financials as well. FY 19, 20, the years before that, the revenues were meandering around that 300, 350 odd crores marks. And then you had those dips, and that was primarily on account of COVID. And the first half of this year itself, the company has done about 184 crores in terms of revenue. If they double that, then of course this would be one of the record years for the company. But importantly, it is the profitability of the company that has surprised the street positively. Over the last many years, the company had been loss-making. FY 22 was when it first turned profit, the second half of that year, that is. And the first half of this year itself, the company has gone ahead and done 26 crores of profit. And that's nearly 4 times that the company had done in, FY 22 itself. So that is a big driver for the company. What's the turnaround driver? Revenue from cloud kitchens, delivery. They have made some changes to the business models. Efficiency gains coming in through cost rationalizations during the pandemic. They have sustained now. And store rationalization. In fact, the company, held back on unnecessary expansion of stores, cut down on stores which weren't working, and with high ROCE businesses like cloud kitchens and delivery, etc., they've only gained more revenue, cut costs, and all of that has resulted in better performance, financial performance, and as a result of which the stock is up. The big question, however, are they looking for a financial investor or a strategic investor? What do they do with that money?
Okay, well, we'll find out more once they do approve that fundraising on the 21st of December, and more details on that. Thanks, Mangalam, for that. Well, let's move on then. Reports suggest that the Tata Group is looking to pick up stake in UTI AMC with only final agreements pending regarding the valuation. Surbhi is here with more details on this.
Hi, thanks for that. So UTI AMC has been surging in trade today, and that is because the report suggests that Tata Group is in final talks to buy a majority stake in UTI AMC from 4 state-owned financial entities. PNB, LIC, SBI and Bank of Baroda together own close to 45% stake in the company. The reports also suggest that the final agreement is being sought on deal valuation and internal approvals have been secured. Tata has also received in-principle nod from T. Rowe Price Group, which owns close to 23% stake in the company. If this deal goes through, the combined firm will be the 4th largest AMC in India. These reports have not been independently verified by CNBC-TV18.
All right, we take that point, Surbhi. Thanks a lot for that. JSW Infra is the other stock which is in focus. It counts itself to be among the top 5 port companies in the country. It's filed its draft red herring prospectus, so looking for an IPO again. Yash joins in with the details of that one.